All right, let's talk more about the inflation picture and what the markets are pricing in. Bring in Steve Leisman. We have got to bring in Steve because he's got the answers, we hope. What do you think, Steve? I mean, the market's at record highs. We were just saying maybe it's all priced in at this point.
So can we get a picture of, I don't know, maybe Joe Adami's face when I say this, which is sometime
Joe?
This morning around 9:15, Guy Adami, sorry.
He's been up for a long time.
Guy's face here. Sorry, it's been a while. But here's the thing. Sometime around 9:15, after a 5% inflation print came out, guy on some trading desk and a whole bunch of trading desks said, go buy 10-year bonds, and that's what they did. Now, it just strikes me as a little bit over the top here. I was early and pretty forceful with this idea that this inflation thing could not be transitory. But I never thought there was no risk around the idea that inflation could be a problem. So to me, it seems to me like the market maybe is overcorrecting from an overcorrection earlier. If you look at the 10-year over time, Melissa, we went from like 90 to 160 or even as far as 170 in about a flash of an instant, right? And now it looks like it's correcting on the downside. But the idea that people would turn after this 5% number, the second one that's hot in a row, with, by the way, some indication that there may be some lingering or lasting issues inside this number, I would say that that's what's the word I'm looking for? A little bit too sanguine about the risks of inflation.
Oh, okay. So too sanguine at this point. I want to ask you, though, about what Tim had posited, and that is that the bond market is actually trading 2 steps ahead of the Fed. So seeing even past transitory inflation, seeing back to a normalized economy, to a time when the Fed will actually taper, and so interest rates will actually go lower.
Yeah, Tim is in like a third dimensional, ice petal flowers dissolving kind of world where he's like different. I mean, he's like so many far dimensions down. Maybe that's true. Maybe they're down into this, super double reverse psychology thing where they're down in there. That could be. I can't deny that. But I just think that there's some risk on the table, and somewhere between 170 and 150 is where things belong. But this idea that we dropped like a rock on the 10-year and stocks shrugged it off. I mean, there are arguments that some stocks will do well in an inflationary environment. I'd like to see a little more proof of temporary before I put all my chips on the table.
Yeah, I mean, the proof of temporary is exactly right, Steve. And, Joe, people call me a lot of things. Joe's a first for me, but I understand sort of that Italian thing. I totally get it. But I'll say this. I think, we talk about short squeezes all the time and all these different individual stocks. I mean, I think to a certain extent, you might have been seeing the same thing today in something like the TLT. I'm not trying to explain why I've been wrong, but I think that is an explanation as to what's going on. I mean, short squeezes are happening all around us, and I think you just sort of illustrated that point.
Can I show you guys 2 charts I think you have in the back there? First, I want to show you the airline chart, which is what you'll see 2 solid months of gains for airline fares. Huge gains, 10% I think the prior month, 7% this month. What you'll see when you look at that chart is we're still below where we were. So we're still on the way back up. There we go. That number, that peak on the left there of the screen is below or is above the peak on the right there. So we still have about 6% below where we were before. That has room to grow. It could go again, especially with all the focus on domestic travel, no international travel yet to speak of. The other chart I want to show you, and this kind of bodes well for what's going to happen on the energy side of inflation, is U.S. production. We're still like 1 million barrels below where we were. This is just the domestic side. OPEC still has oil off the market there. So that you see the peak of U.S. oil production there. What is that? 1.2, above 1.2 million. Now we're down about 1 million, 1.1 million, wherever it is right there. But that's going to come back, I think, some of that production and certainly some of the OPEC production. So one of those things tells you over time, I think energy is going to come back down, but there still could be some room to run things like energy, used car prices through the roof. I don't know if you guys are holding on to some classic cars or ever, but you get the collectibles part of it and you get the inflation part of it when it comes to used cars these days.
All right. Steve, great to see you. Thank you as always. Steve Leisman. I know Pete collects watches. I don't know if it falls in that category, Pete. But in terms of, I thought what was interesting was the markets may be too complacent effectively about the risk of inflation that's out there at this point. What do you think?
Well, that could be, Mel, but I think there are times where we just have to look at things and we're in a mode of pause. And you got just going back to housing just for a moment. When you look at where some of those builders were back in January when this started, really, and this explosive move to the upside, a name like D.R. Horton, for instance, DHI, that was in the 60s. It got up over 100, and now it's pulled back some. But it's still up. When you look back, it was in the 60s, and now here it is in the mid-80s. It just tells me a little bit of something about rotations and where people want to be and where they feel comfortable and the moves that we've gotten. And I think it's just about every part of this marketplace. And I think that there's a lot of different ways that you can correlate things and say, you know what? Now it's been that time. So we had that 6-month run with the FANG stocks that absolutely exploded to the upside. They've paused ever since, and everybody wants to ask, what's wrong? What's wrong with Apple? What's wrong with some of these stocks? I don't think there's anything wrong. I think that's that pause that we see as we rotate, and we're seeing that in all kinds of different sectors, and I just think that's very, very healthy. So that's why I feel even more bullish than I have been, because of the fact that I think this healthy rotation makes a lot of sense, and we are seeing the movements out of certain areas and back into others. And when you look at the financials, all you got to do is look at that 10-year. Today, the 10-year was down. We're down below 1.5. Financials were off fairly significantly today. So it does make more sense, I think, than we are maybe leading on right now.
So Pete just gave you all these reasons why he's really bullish, and they all make perfect sense. When you think back to the throes of the pandemic back in February and March, when we were in that black hole, I think as Druckenmiller called it, no one really knew what was going to happen here and what worked out of that. Some of those biggest tech names, the ones with like recurring revenues or deep moats and great balance sheets, all that sort of thing, and they massively outperformed. And then what did we have? When we got the vaccine news in the fall, we saw a rotation out of all those names into more GDP sensitive sort of names. And so now what Pete's saying is, if you're kind of worried that things are going to maybe, I don't know, plateau out, we're going to get back to some sort of normalcy where we can start judging on pre-pandemic levels, well, then it makes sense that you would go back into some of those big defensive tech names with the recurring revenues and the moats, and then possibly into some of those secular growth names, because we've been talking about it a little bit. There's a lot of downtrends that were pretty nasty in names like Zoom that were down 50% Well, they just broke above those downtrends that have been in place for 6 or so months, and you're starting to see that in a lot of different names. You're starting to see it in the ARK Invest, that ARKK. Remember we used to talk about that a little bit? That thing just broke above its downtrend that had been in place, and that was at 160, went down to 100. I think it's traded at 114 right now, above that downtrend.
And what about the materials trade or financials?
I don't think the materials trade is over by any stretch of the imagination. You know, Pete talked about a pause. Well, I think a lot of these names are taking a pause as well. Dan mentioned that, lumber's come off 30% or so. Copper's probably going to roll over a bit, and maybe these stocks take it on the chin in the short term, but the thesis behind them is absolutely still intact. And if you look over the last 6 months, there have been pullbacks in every single one of the names that we talk about, only to find buyers and take them to the next level. I think that's what we're in the midst of now.
Shepard Smith here. Thanks for watching CNBC on YouTube.